No action being the best action was the unanimous decision by the Bank of England MPC. But will deflationary pressures and a strong pound hinder the success of the UK's economic recovery story? Joining me to discuss is Alan McQuaid. Alan, the minutes of the December MPC meeting show a committee united in their belief no further stimulus was needed, either through extra quantitative easing or a cut in bank rate. Is it again the case of wait and see mode for the Bank of England, and therefore time to take stock to make sure when rates are hiked that they are done so in a credible fashion?
Well, I think the bank are obviously still concerned about the durability of the recovery. Having said that, the numbers have certainly improved in recent months. And I think quantitative easing is certainly off the cards going forward. And in fact, I think interest rates have bottomed as well. So I think we'll be talking about a rate hike rather than a rate cut in the months ahead. So I think the big issue now for the bank is really how soon they start to hike interest rates. I think at the moment they feel comfortable enough that they can wait and see in terms of doing nothing. But I think the days of easy monetary policy are coming to an end.
At the heart of the MPC's forward guidance is a commitment not to tighten policy before the jobless rate hits 7%. This was bolstered by today's report that the rate has fallen to 7.4%. The minutes, however, noted that the improvement in productivity so far has been conspicuous in its absence. Could this actually point to a more rapid decline in the jobless rate?
I mean, it could, but it could also be an excuse from the bank as to why, trying to explain why the jobless rate has fallen much quicker than it assumed. And I think, in fairness to the Bank of England, it's not just that they are having a problem. I mean, the same is happening in the United States with the Federal Reserve, and it'd be interesting to see what happens with their comments tonight in terms of why the jobless rate is going down much quicker than they'd assumed. And clearly, the quicker it moves down, it has implications in terms of, you know, the start date for hiking rates. But I think the other issue for workers is I think the dynamic has changed. I think with an improving economy, I think workers may actually feel they're now entitled to higher earnings. I think maybe if firms start to offer higher wages, then actually productivity may start to rise again. So I think at the moment, I think the economy would suggest on its own that the jobless rate will continue to fall, but you know, you would expect some improvement in productivity as the months go on.
It has been an interesting year so far for the British sterling, as the pound went from ugly duckling to one of the best performing currencies. The Bank of England stated any further rise would be a risk to the UK recovery, but how do you see sterling performing moving forward against potential loosening from the ECB and tapering from the US Fed?
Yeah, well, I think on purely economic fundamentals and on the outlook for interest rates, you'd expect sterling to appreciate against both currencies over the next 6 to 12 months. However, I suppose the fact that sterling has been strong recently, that could push down inflation. We've seen an improvement in inflation in figures yesterday, and I think they may actually reach their target for the first time in a number of years. In 2013. So, you know, I mean, if sterling continues to be strong and it brings inflation down, well, then there's no urgency on rates being pushed up. And I think one of the reasons that sterling has probably risen in recent months is that the markets have assumed that the UK will be hiking rates sooner than either the Federal Reserve or the ECB. But my own view is that I think that will be the case. I think the economy will outperform both the US and the Eurozone, I think, over the next year or so. I think that will put pressure on sort of market rates. And I think the bank, while not raising rates in 2014, I think will end up, you know, increasing rates sooner than they think at the moment. And as regards sterling, I think that should push sterling up. So I'd be looking for stronger sterling. I think 80p or 125 against the euro, and you know, certainly up to 170 or higher against the dollar in the going forward.
Alan, thank you for your insights. Lovely to speak to you. Well, viewers, that's all from me for the moment, but Darren McDermott will be back tomorrow with a look at the retail sales from the UK, so please do click back for that. Goodbye for now.